Welcome back to the eNCA Money Desk with me, Aropa Madzena. And the operating environment in South Africa has been much more challenging than Nedbank expected. The bank's released its results for 6 months that ended on the 30th of June. Let's speak to the CEO now, Mike Brown. He joins us as always. Mike, thank you very much for your time this evening. So Nedbank did report increased profit, and that was thanks to the higher interest rates that we've had. But there was also an increase in the number of bad loans in the reporting period. Talk us through this dynamic.
Thanks and good evening. Yes, certainly. We were pleased to report 10% headline earnings growth in that difficult environment. As you said, we saw stronger revenue growth, in fact, 14% revenue growth, good cost control, around 7% growth in costs, and then a 57% growth in impairments. Most of that confined to what we would call the consumer segment in our retail business, where middle market South Africans and entry-level South Africans really battling with a low growth or no growth environment, combined with 475 basis points of interest rate increases over the last while since rates began hiking in October 2021, and much higher levels of inflation.
Yeah, I mean, you did see some positivity come through there from corporate and investment banking when it came to the positive contribution. And indeed, it is the consumer that is struggling. As you say, their 57% increase. What are you expecting in the next 6 months, Mike? It does look like the economy is set to remain subdued unless we see some kind of a dramatic turnaround. What do you anticipate just based on what you had to provide for impairments in this 6 months?
Well, certainly we would expect the economy still to remain subdued. It's not possible for the economy to grow much faster while we have such severe shortages of electricity. So we expect roughly 0.3% GDP growth this year, and maybe somewhere between 1% and 2% during the course of next year. And against that backdrop, we clearly continue to focus on things that we can control. And we would expect that bad debts will remain elevated, but hopefully slightly lower in the second half. There's usually a little bit of seasonality in retail bad debts between H1 and H2. We also know that many consumers will benefit from the drop in inflation. And then probably it will take into 2024 before we start to see interest rates beginning to reduce. And then the whole cycle of banking and profitability will repeat itself. We'll see a squeeze in some revenues, and we'll start to see a reduction in impairments.
And so with that, Mike, what guidance have you given shareholders? You were able to give out a nice dividend there, increase of about 11%. But based on the headwinds that you've just described and recovery only going to be seeing in the latter part of next year and going into 2025, what is the guidance that you've given them?
So we certainly give quite detailed line-by-line guidance, which would interpret to the bank still remaining resilient, still remaining profitable, and still being able to grow both profits and dividends, notwithstanding the difficult economic environment. And we would hope, if you look at that guidance, to be able to grow in the second half of the year at roughly similar levels to what we were able to achieve in the first half.
Now, Nedbank did a study a little while ago, Mike, around households that are actually now trying to hold back on taking out more credit despite the difficult economic times and many of them actually needing the credit to survive. Is this a trend you're likely to see continue, where people are a little bit more conscious of the higher repayment rates that they'd be getting at different financial institutions?
Well, so, banks have many customers who borrow from us, and clearly they're under pressure from the rise in interest rates. But we have an equal number of customers who put money on deposit with us. We need to balance our books, and all of those depositors will in fact be benefiting from these higher interest rates. But focusing in on those borrowers, clearly, this is a difficult time. We are working with many of our customers on helping them with debt restructure plans, debt consolidation plans. And certainly, customers need to be sensible around debt and ensure that they only take on debt that they can afford, and that debt is wisely spent and isn't being spent on consumables.
Finally, Mike, some of the projects in the pipeline that Nedbank may have in terms of service provision to contribute to the growth of alternative energy projects in the country. You alluded to it earlier in our conversation that load shedding continues to be one of the biggest issues in the economy at the moment. What is Nedbank looking at when it comes to the bank's contribution to creating alternative sources of energy via new projects?
So Nedbank really has been a market leader across renewable energy finance in South Africa on multiple levels. So firstly, government's renewable energy rounds that have closed to date, Nedbank has been roughly a 40% market share player in all of those. More recently, we've seen an over 300% increase in the finance that we're providing for retail rooftop solar, and then large corporate industrial generation is really beginning to accelerate. We have about 13 billion rand of loan finance for those that are in the process of being paid away. Those projects only likely to connect to the grid at the back end of 2024, so only providing meaningful relief to overall load shedding into 2025. And we're also a very strong participant in all of the current rounds of renewable energy, where we've got about a 10 billion rand pipeline there. So certainly, this is an absolute area of focus for us, and an area where we are very fortunate to have very strong teams in our investment bank.
And then just quickly, if you will, Mike, for clarity for our viewers, the solar panels that you offer for homes, or retail solar panels that you just mentioned, are those exclusively for Nedbank clients, or is that extended to anyone who's looking to get financing for solar?
No, anybody who's looking for financing can get it. Clearly, it's subject to suitable affordability checks. And we're also now using our Avo Supershop platform to enable people to actually purchase solar and inverters, etc. So not only do we help finance them, but we also help people access this sort of solar technology.
Brilliant. Thank you, as always, for your time this evening. That is Mike Brown, the Chief Executive of Nedbank, joining us to discuss the results, the consumer outlook, but also projects that they are financing when it comes to creating alternative sources of power in the country.